Hello, I'm Stan Longhofer, Director of the WSU Center for Real Estate. Thanks for joining us for this quarter's Wichita Housing Market Update. In this edition, we'll look at how the market is shaping up as we move toward the summer. Overall, the Wichita housing market has continued its path of the last several years with slow, steady growth. Because home sales are very seasonal, rising in the spring and falling in the autumn, sometimes it's easier to see longer-term trends by graphing each year's sales by month. That's what's shown in this chart. As you can see, sales in the first quarter of this year, shown in dark blue, were just barely higher than they were in the same months of 2016 and 2017. Unfortunately, it appears that sales won't keep up with recent years as we move into the summer. This graph shows the number of contracts pending at the end of each month over the past 3 years. The pending contracts should translate into closed sales in the next few months. While pending contracts were keeping pace with 2017 in January and February, they were down 5.3% in March. This suggests that sales in the second quarter are unlikely to match last year's peak. The challenge is that the supply of active listings continues to shrink. At the end of March, there were only 2,059 homes listed for sale in all of South Central Kansas. This is down more than 30% over the past 5 years and less than half of what it was at the peak in 2005. The tightness of the market can be seen by comparing the number of active listings to the number of sales in a given month. This gives us a measure called month's supply. For example, if there were 200 sales in a given month and 1,000 active listings at the end of the month, we'd say that there was a 5-month supply of homes on the market. In this chart, we've calculated the month's supply for 4 different price segments of the market. Homes listed below $100,000, those listed between $100,000 and $250,000, those listed between $250,000 and $400,000, and those listed for more than $400,000. From this, we can see that the hottest segments of the market are for homes priced below $250,000, with less than a 2.5-month supply available even before we hit the peak summer selling months. In contrast, the market is much softer for homes priced above $250,000. While a 5-month supply wouldn't be considered a glut, there is ample inventory available at these price points, and sellers need to be aware that the incredibly tight market narrative may not apply to them. Overall, however, the lack of inventory does appear to be driving up home prices. Last year, the typical home in the Wichita metropolitan area appreciated by 4.2%, according to the Federal Housing Finance Agency's All Transactions House Price Index. This is solid, steady growth, similar to what we saw prior to the onset of the financial crisis in 2008. This concludes this edition of the Wichita Housing Market Update, a production of the WSU Center for Real Estate. I hope you found it useful. Until next time, thanks and have a great day.